But James, James's business right now operates literally out of his pocket. It's 35 to 60 million in receivables every month between the wells and the buyers of oil, Exxon, Dance Brothers, etc. Big companies. For him to expand, he's got to leverage cash. He's got to be able to bring more cash in for him to grow. He can grow up to 150 million. We're going to help him do that. Like I said, he's operating 30 to 40 million right now. We're going to help him expand up to 150 million on our platform, and he has nothing to worry about from being overtaken, a stock buyout, et
Yeah.
cetera. All he's got to do is take on the debt, pay that, or do those distributions to those investors that own those tokens, and then add as an added benefit for anybody out there that understands stock share and position. Well, if your company value, let's just do an easy example, and Mike, you're doing a $10 million development, okay? And in that development, you have renters that pay rent, right? So you get that rent, and that's what you distribute out, a portion or fraction of it, right? Out to those those investors that come in and invest in your company, right? Well, think about this. If you did 10 million shares, each share was $1. Okay. And these are free trading shares, just like stock, just like Tesla, just like everything else, right? Now think about this, Mike. If you owe a debt to all of those shares, and you see that share, maybe Travis for some reason bought $50,000 worth of your token. Travis needed to liquidate, right? And the market was a little soft. So Travis had to sell at 85 cents. Mike, what are you going to do as the business
Oh,
owner?
I'm buying that up as soon as I can. I just made 15%.
100%. Absolutely. Your cap rate compression just went down, right? Which means your value went up, but you're buying your own debt back. So now you don't owe anything to Travis anymore. You've bought back those shares. So if you were to bring in $10 million, tokenize an asset, and as you're starting to get cash flow, you're paying to those investors, but you're also buying your own. Look, investors can buy their own tokens back. Guys, it's an open
Yep.
market, right? So Mike goes in and starts buying token back and buying token back. 5, 7 years down the road, Mike just got a $10 million loan that he paid a fraction of the interest on because he bought the tokens back at a value. This is this is revolutionary business. It's changing
Yep.
the game, and we're right. We're the first.
Yeah.
Look, we're not the first ones to think of this, but we are the first ones to build an entire framework to do it properly, transparently, and within regulatory guidelines. And I could tell you, unless you've taken a couple hundred companies public like our team has, good luck.